So I don't know what the situation in Nigeria is today, but I do remember in the 70s, 80s, and the 90s, you had a clause in the insurance decree which said no premium, no cover without premium. Thank you, sir.
That's very good to know. I think this was not a question anyway. This is just for the information of everyone. But I believe if it is a warranted premium, of course, you don't end up with claims and without any premium paid. At the same time, we also make sure, like, in this particular market also that, we say we can't buy cover for you from our point of view, because of course the underwriters they have to go back to reinsure, and then there's a certain portion which is just retained with those, and then the risk is always distributed. So that also is very important to understand. That's what we were talking about. Thank you very much. And Mr. Fatai, Lawal, he wants to be addressed, Mr. Lawal. So, Mr. Lawal's apologies.
Exactly.
And it's a wonderful to know about Africa. And then we missed Mr. Zofu, but again, we'll ask him to come sometime to hear. Sure.
Yeah, because I would have loved to respond to Mr. Savu's question, but basically just to let him know that there is a section of the Act, Section 61.3 of the Insurance Act of 1997, that provides for no premium, no cover. Unfortunately, the market abused this provision because of competition. You see, if a company insists that you must pay before you grant cover, there is another company just next door who is willing to give you on the assumption that you will pay in another 1 month or 2 months. And people run into difficulties. They ended up not paying in 6 months, in 9 months, and they want to pay when there is a claim, like he's suggesting. Yeah, and I always say that premium cannot pay for claims. If you don't pay the premium in advance, you should not expect settlement of claim. Thank you very much for your intervention.
So with that note, ladies and gentlemen, I have to fill up the gap of Mr. Salah, which was supposed to be our first presenter, which he hasn't come. And the organizers, they requested me to move my presentation, which was at 2:40, for the second one. So I hope you will bear my presentation at the moment. I'm going to talk about energy and marine industry. That's also one of the segment which is a very, I should say, lucrative and very attractive. And at the same time, there are issues in that particular segment, which hopefully I'll try to justify in my presentation. To start with a good note, I'll just share a joke of our fraternities, our colleagues. Sometimes we boast, and when we sit together. There were 3 sales people from the insurance industry, and they were all talking about their own companies and their services and effectiveness of the company's services. One salesman, he says, we had occasion, whereas there was a cover, life cover for a family, and just after demise, when it came to claim, we have sent the check to the wife second day itself. So this is the effectiveness of our company. The second one says, oh, really? That's nothing. We had also similar situation, and then the guy met an accident, there was a motor cover, and at the spot, we delivered the check. Now the third guy started thinking, oh, they are so effective, so what should I say? So he said, we have a remarkable, our own effectiveness here, and I would like to share that we are at 21st floor, and one gentleman, he just came down from 40th floor. While passing by from 21st, we handed the check to him. So that's what the effectiveness. So on this note, I'll take a little outline to just give you a rundown of this particular event, which is economic outlook on the energy and marine industry that I'll cover, and what are the factors which are influencing offshore oil and gas market. And I'm going to talk about cyclic nature of oil price and global economic downturn. I'm also going to talk about outlook for offshore energy vessels, the major factors driving insurance industry vis-a-vis marine and energy sector, general state of the market after the recession, and the underwriting environment with upstream and downstream, then a regional overview due to the unrest in the Middle East and Africa, which all we have been experiencing, and region on energy marine insurance sector with a conclusive remark. So as we know that the world economy ran out of steam in 2008, while 2008 at that particular point of time was also a record year for some, as the economic boom reached its peak in the first half of the year before Lehman Brothers. The worldwide energy industry ravaged by the economy and financial crisis over the last 2 years has passed through its darkest hour, and global GDP of the key driving nations went down drastically. Global activity in the key areas, especially in production, trade, while non-fuel commodity prices also affected. The recovery remains largely policy-driven and faces significant challenges as policymakers look to unwind the unprecedented fiscal, monetary, and financial support they provided to keep their economies and financial markets from collapsing, which we have been experiencing here as well. When the world economy collapsed in late 2008, at that particular point of time, the order book for the shipping and offshore industry was on unprecedented level. And many of these new builds contracts have since been cancelled or renegotiated by the yards. While some new tonnage, as we said, will be delivered, that was, we got the report from the yard, which is a global yard monitor, which was that most of the slippage happened in 2011 because of the liquidity crunch. While the world fearfully debates whether there will be a double-dip recession, yesterday we were discussing as well the same thing. The energy industry and the underwriting markets are both suffering from the same problem. And we have a surplus capacity as rates are softening, yet fresh capacity is queuing up to join in, particularly in Lloyd's, almost in defiance of logic. There's no logic to that. If I see economic outlook and energy marine industry, as we all know that 70% of the Earth's surface is covered by oceans, and today 60% of the world's petroleum production comes from offshore operations in water of more than half of the coastal nations on Earth. So it is no surprise that as onshore oil and gas reserves will deplete, exploration and production activities will extend into offshore basins, which has potential proven reserves. This in turn will create opportunities for exploration and production companies, oil fields equipment manufacturers, shipyards, oil and gas suppliers, human capital, professionals, technology and assets to turn the tide from the doldrum it was in a year ago. Worldwide offshore industry is on a promising to bullish track. Energy demands wants to grow long terms, China, India, elsewhere. Offshore accounts for 1/3 of oil production, which is up significantly from past. Now, these are the factors influencing offshore oil and gas market. We see an increase in spending activities, mergers and acquisition taking place because everyone is trying to consolidate their own status. Capital expenditure is on average down. Investment climate is improving, although major reforms in Brazil's energy sector, which happened recently after the post-recessions. Earlier, there was more nationalized approach. Now there is more liberal approach in Brazil. So you can go and venture out in partnership with Brazilian companies and have a distribution sharing agreement. Global offshore drilling spending has increased. Shale gas again plays a key role in unconventional investment in energy sector, which is a very new development which is taking place. Global energy investment to restart all the stalled projects. So these are the highlights and factors which are influencing the offshore oil and gas market. Now, as we were talking about the cyclic nature of oil price and global economic downturns, I will try to justify, as we know that due to global financial crisis, at the end of 2008, we have observed a global economic downturn in 2009. And as per international IMF, global output fell by an estimated 0.6% in 2009. Due to imbalance in supply and demand for oil, we observed a sharp decrease in oil price from $140, which was at the peak at the boom time, which came down to a $40 price per barrel, which was in first quarter of 2009. The oil and gas sector is building up slowly as world markets pull themselves out of recession. We have observed that the industry is cyclical in nature and subject to fluctuations in demand, with the demand for crude oil increasing, especially from China and India, which is a promising market, as well as the need to offset falling output due to natural field depletion. Oil and gas companies have plans to increase investment in 2012. Amid macroeconomic uncertainty and market volatility, analysts are putting the industry on a promising to bullish track for 2012 as the oil prices remain solid. If you see rig count rise and offshore industry is turning the tide from the doldrum it was in a year ago. Now we talk about energy vessels market, how it is optimistic, but cautiously optimistic. Oil companies throughout the world have been re-evaluating energy development, which has given a collapse in oil prices because of that, which has made some project not viable, uneconomic. Integrated oil and gas companies are showing an increasing reliance on very large projects to replace the more diverse existing production base. Demand is still strong for E&P rigs and offshore supply vessels, but market is moving with cautious. There is a lack of enthusiasm to commit to additional new build projects. Market has seen a few cancellation and slippage, as I said to you in the beginning. National oil companies have a strategic interests that differ from listed companies, of course, like we have here local ADNOC and ADNOC group of companies. Shortages of semi-submersibles, surplus of jackups, continued financial turmoil, prevailing low oil prices and economic recessions are impacting activity level. Even if companies take a bullish outlook on a recovery in oil demand growth, declining revenues and unavailability of credit will limit their ability to invest in new build projects. Major factors driving energy and marine insurance industry. The global energy insurance market have had to take immediate stock of their position. Meantime, the statistic continues to point to overall profitability in both these segments. Major factors driving energy and marine insurance industry also contribute piracy, especially in this particular region, which continues to be a huge concern, spreading from the Gulf of Aden into the Indian Oceans. And claims arising from piracy have exceeded $300 million. And it is hard to say any solution in the short term. I don't see any solution in the short term, although we have been discussing and there have been conferences and summits specialized on KRA. Meanwhile, the additional cover and support provided by a kidnap and ransom policy has resulted in policy being expensive to those who have elected to purchase such policies.